What's your interest rate? Today's discussion addresses the impact of points and fees on determining your interest rate. Let's briefly talk about fees. The lenders will have developed a fee structure on which their base rate sheet is developed. These fees may be itemized or they may be bundled. Examples of itemized fees are things like credit report, appraisal, flood check, tax service, and sometimes title and legal expenses. The largest of an itemized fee may be called by a whole variety of names, such as application fee, lender fee, closing fee, commitment fee, processing fee, underwriting fee, any or all of those things. Now, some lenders will bundle these fees into one larger fee. So rather than listing several fees on a good faith estimate, there'll be just one fee disclosed. Regardless of whether the fees are itemized or bundled, the base rate sheet is based upon, in part, this fee structure. Now, I know this sounds complicated, and I agree, it is. The important concept to understand is the total amount of this fee structure is factored into your rate. What you should expect is the higher the fee structure, the lower your interest rate, and conversely, the lower the fee structure, the higher your rate. Now, your lender is required to disclose to you these fees in a good faith estimate within 3 days of your application. So when you're calling lenders and asking, what's your rate? Until you see the fee structure of the lenders you are shopping, the rate is only part of the story. Sounds complicated, and it is. Now, lenders are also required to disclose what is called an APR, or an annual percentage rate, based on a government-prescribed formula. This is to include not only your interest rate, but will also include some of these fees, but not all, as portions of your closing cost. Now, this APR calculation is imperfect because it's subject to manipulation. It can be manipulated because it's a government-prescribed formula. This formula has categories for which certain fees are to be included in the APR, or annual percentage rate calculation. Let me give you 2 examples. 1, attorney fees versus title examination fees. When you close a mortgage, there will be legal expenses incurred at the time of closing. The lender may not have any control of these expenses, but that's not always the case. If your lender encourages you to use their title company, then they do have some control of the legal expense, and thus those fees are more than likely factored into your rate. Now, that goes beyond the point I was intending to make, but it just kind of struck me all of a sudden. So let me get back to attorney fees versus title examination fees. Let's suppose your basic legal expense is to be, say, $600. If you categorize that $600 as an attorney fee, it is included in the APR calculation, and thereby it increases that APR. On the other hand, if it's categorized as a title examination fee, it's not included in the APR calculation, and it will lower that measure. Now, no matter how it's categorized, the cost is the same. Sounds complicated. It is. A second example of how an APR can be manipulated is an item called interim interest or prepaid interest. When you close on a mortgage loan, you're going to pay interest at the day of funding through the end of that calendar month as a part of your closing cost. This is called interim interest or prepaid interest. This is calculated on a daily basis. The interim interest is part of the APR calculation. The number of days your loan officer uses will affect the APR. So some loan officers will use 1 day to lower the APR. But this may not coincide with your scheduled date of closing. So here are 2 examples of how a loan officer may knowingly, or hopefully unknowingly, manipulate the APR calculations. Sounds complicated, and it is. I had intended to address points and origination fees in this episode, but I see that I've just gotten too verbose just talking about fees. We'll save the discussion about origination fees and discount points for your next installment of What's Your Interest Rate. I hope you're beginning to understand the complexities to what seems to be a simple question: what's your interest rate? It is more important that you work with a trusted loan officer than to select someone just by what off-the-cuff lower interest rate quote they may give you early in the process. This has been a presentation of My Home Loan with Jay.